Welcome to The Explainer. Today, we're breaking down News Corp's third quarter earnings for fiscal year 2025. We're going to focus on the key numbers and the strategies straight from the Chief Financial Officer to see exactly how they're playing the game in this economy.
So, the big question right off the bat is, how does a legacy media giant, a company with deep roots in old school media, actually find a way to grow in today's, kind of weird and uncertain economy? It's a tough nut to crack, but it looks like News Corp has found its answer. And that answer is pretty simple, at least on the surface. It's all about a laser-focused strategy on digital. They're basically doubling down on what works, which, as we're about to see, are two incredibly powerful digital businesses.
Okay, first things first, let's get into the numbers. This is the high-level snapshot for the quarter that really sets the stage for everything else. So, the company's total revenue grew a solid 2% year over year. That brings them to over $2.1 billion. Not explosive, but steady, solid growth in a tough environment. But here's where it gets more interesting. Their profits, what they call segment EBITDA, grew even faster, up 5% to $340 million. And that's exactly what you want to see, right? It means the growth they are getting is more profitable. And this chart, wow. This tells you almost everything you need to know about the company's transformation. Get this, a massive 89% of their profits now come from just two places, Dow Jones and digital real estate. That is a huge strategic shift. So let's zoom in on those two divisions. These are the engines that are firing on all cylinders and, frankly, powering the entire company right now. First up, we have Dow Jones. Now, you probably know them for the Wall Street Journal, but what's becoming really crucial for them is their whole suite of professional information services. Dow Jones's revenue climbed a healthy 6%, hitting $586 million. And here's the kicker, an incredible 84% of that money is now coming from digital. So their transition away from print in this segment is, well, it's pretty much complete. And this is where the real momentum is. It's not just about news subscriptions. It's their professional business-to-business services. Their risk and compliance division, for example, absolutely surged, up 16%, because they're landing new customers with products those customers just have to have. All right, engine number two is digital real estate. Now, this is a global business for them, but this quarter, the real standout, the one everyone was talking about, was Realtor.com over in the US. Now, think about the housing market right now. It's tough, right? High interest rates, all that. Despite that, Realtor.com pulled off an impressive 9% revenue growth. That's actually its best quarter in almost 4 years, which is just a huge sign that their strategy is working, even against some serious headwinds. So, how'd they do it? Well, the CFO, Lavanya Chandrasekhar, basically said it's because they made a very specific strategic shift. They stopped chasing every single click and started focusing on attracting people who are actually serious about buying or selling. And guess what? Those higher quality leads are way more valuable. But, okay, it wasn't all sunshine and roses. Like with any massive company, there are always different parts of the business moving in different directions. And for News Corp, the big challenge this quarter came from their book publishing division, HarperCollins. So take a look at this because the difference here is really important. Revenues dipped just a little bit, down 2%. Okay, that's manageable. But profits, they fell off a cliff, down 28%. And a gap that big tells you there's something more going on under the hood. So, what happened? Well, part of the story is just tough context. The year before, they had some monster bestsellers, and those are just really, really hard to follow up. Plus, the overall market for books was just a little weaker. But there was also a very specific one-time event that really hurt them. They had to take a $13 million write-off because a book distributor they work with is expected to close down. That's a big, single hit that explains a huge chunk of that profit drop. All right, so you've got this mixed bag, right? Digital is soaring, but publishing took a hit. So what did the CFO say about the road ahead? What's the game plan from here? Well, the outlook seems pretty clear. Keep fueling the winners. They expect Dow Jones and Realtor.com to keep growing. For books, they see some encouraging signs and have a stronger list of new releases coming up. And for everything else, it's all about being disciplined and managing costs. And to really put their money where their mouth is and show how confident they are in this strategy, they're quadrupling the rate at which they buy back their own stock.
That is a very strong signal to the market and a direct way to return cash to shareholders.
The CFO's final comment here really sums up their entire mindset. Management is basically saying, hey, we don't think the market fully gets how much we've transformed this company. They truly believe their stock is a bargain right now. And that kind of leaves us with one big final thought. When you look at these results, you see a company that's relying less and less on old school advertising and more on high-value digital information and services. So you have to ask, are we watching a traditional media company transform into a B2B data and digital services powerhouse right before our very eyes?